Hey, what's going on, guys? Today we want to look at this article that was posted on Yahoo Finance. It's a author from the Motley Fool, so definitely go check out their website for more details. But the subject of today's video: can these two ETFs beat the S&P 500 in 2025? They did it in 2024. We'll take a look at that data here in a second after we look to see what these two ETFs are and what this author is predicting for 2025. Let's go ahead and dive into it here. So let's see. So the S&P 500 index is set to cap off a banner year through December 27th. The broad market index is up 25% year to date. The Wall Street is calling for the bull run to continue in 2025. So 2025 is going to be a big year. You know, we have Donald Trump being reinstated back into the office. So we'll see how the market kind of reacts to that and if it can continue on this bullish momentum that has carried us through 2024. So let's go ahead and scroll down a little bit further here. Investing into the S&P 500 through an ETF is generally a smart move, according to this article, as the index has historically returned an annual average return of 9% per year with dividends reinvested. But other funds may beat the S&P 500. So let's keep learning, keep scrolling here. So the first ETF on this list is VanEck's Semiconductor ETF, ticker symbol SMH. So if you want to tilt your portfolio to semiconductors, that's been a smart move over the past several years. If you have continued belief in that sector, this is an option you can look at. You know, it's up over 800% in the last 10 years. So it's been on a massive run. You know, you got the NVIDIAs, AMDs, a lot of the big semiconductor stocks have been just on a tear. And it looks like, they can continue to be that leader in the stock market. So we'll see. This ETF has jumped over 42% year to date. So I'm not sure when he wrote this article. Looks like it was posted on December 30th. So 42% year to date for 2024, though it's down from its peak in the summer. Yeah, it has pulled back a little bit. NVIDIA last year had a massive year as well. So it says, in fact, many of the biggest holdings are closing out 2024 with roaring growth, like NVIDIA, whose revenue jumped 94% in the third quarter. And TSM, which posted a revenue growth of 39%, now trades at a price to earnings ratio of 33, which is not much more expensive than the broad market. Well, there are concerns about a slowdown in AI. There are also signs that the new technology is just starting to take off. Billions of dollars are pouring in for, the CHIPS Act. Companies like TSMC, ASML, Intel, Micron, which are all top 10 holdings of the ETF. Plus cloud software companies are also starting to see meaningful gains from artificial intelligence, which favors increased spending on chips. Yeah, absolutely. If you're looking for an easy way to get exposure to AI, the VanEck Semiconductor ETF is a no-brainer investment to own heading into 2025. This ETF is likely to keep up its winning ways. Yeah, so if you're still a believer in the semiconductor space, AI space, this is a fund you could definitely go take a look at. The next one on the list is kind of a surprising one to me. It is the Financial Select Sector Spider Fund, ticker symbol XLF. It's targeting the S&P 500, but specifically financial select sector stocks. And it's been roaring since the election. It's up 30% year to date, and 2025 is shaping up to be a near perfect combination of tailwinds for this ETF, whose top holdings include Berkshire Hathaway, JP Morgan Chase, and Visa. And then continuing on here, interest rates are now expected to remain elevated through 2025, as the Federal Reserve just recently, announced that they're only expecting 2 rate cuts this year, which would bring, the Fed funds rate down from 4.25 to closer to, under that 4% level. But, as those rates come down, I think that's definitely going to help these financial companies. What's more, the underlying economy remains strong with low unemployment, solid GDP growth, and inflation now under control. Investors also seem bullish on the incoming Trump administration's impact on the sector as they expect to lower taxes and less regulation, which is likely to encourage more mergers, acquisitions, a boon for the investment banking sector. Yeah, so it seems like the banking sector is hoping for good things with the new president coming in office. High interest rates and strong economy are ideal scenario for banks. Okay, in strong economy, yeah. To earn more net interest income and also helps drive consumer spending and demand for loans. Okay. And yeah, so with fears of recession finally receding, these stocks look to be in store for a strong 2025. And then finally, the sector is cheap as the ETF trades at a PE of just 17, a significant discount to the S&P 500. Considering that many of its top holdings are likely to generate solid earnings growth in 2025, the ETF looks like a solid bet to deliver strong performance. So yeah, pretty interesting to say the least. So looking at some of the top winners, so this is from their article. It looks right from their kind of a product that they're offering there. But let's look at, the total real returns for 2024. So this is from January 2nd, 2024 through December 31st. SMH was the winner at 38.49% versus the S&P 500, which finished below 25% year to date at 24.84%, and then followed XLF, also beat the S&P 500 at 30.56%. So that is the total real returns of 2024. Let me know your thoughts down below. Do you think these two funds can outperform the S&P 500 index in 2025? Would love to hear your thoughts. Let me know in the comment section down below.